This is Eric Mwathe, themwathe.com, Sunday afternoon, February the 1st, 2009. While you guys, we all wait for the Super Bowl, just wanted to make you aware of some of the charts that I was looking at this weekend, and the conclusions, is going to be slightly obvious. We'll see how this plays out in the coming days or weeks. But if we start by looking at the XLP, which is a consumer staples ETF, this is a 1 year daily, you will notice that we closed with a break below this wedge which was forming since November. Also, the RSI is showing a material breach. This support has held for many months, and we see a material breach as of Friday's trading. If we take a look at the XLB, which is a materials ETF, you'll see the same scenario. We broke below on a daily closing basis below this price wedge that has been held in since November, and we see that we seem to be threatening the support on the RSI that has held since going all the way back to October. So we seem to be breaking that support. If we take a look at the XHB, which is a home builders ETF, you'll see that again we see the same thing. It's breaking below price wedge support, and the RSI seems to be threatening to break right there. We seem to be threatening to break, especially with a follow-through. Now, if we take a look at the Dow Jones 20-year monthly chart and draw an upward sloping line that touches the lows on a monthly closing basis going all the way back to 1990, we see that as of January's close, we broke below this price channel lows. If we take a look at the S&P 500, we close about 10 points above the 2002 monthly closing low. So we are right here at support or break below this price, this support line here that has held in November and last year. But we are right back to support, and we rally from these levels, or we break down, and you know that we are going to Dow 5,000 when that happens, because that's the consolidation around here in 1994, 95. There was a huge consolidation right around here, and this is pretty much, if this market breaks support here, this is where we are going. That would take us to S&P about 450, and the Dow somewhere around 5,000 or 4,000. When we break this support, there's some secondary support here around S&P 650, but we'll see whether that holds. But anyway, at any rate, one thing I wanted to bring to your attention is that what's really interesting, and it's interesting to me, is 13 of the Dow 30 components are already trading below their 2002, 2003 bear market lows, significantly below. So 13 of the Dow 30 components are already trading below their 2002, 2003 bear market lows. That, also, what's also developing is that as of last week's trading, if you take a look at Walmart, which was one of the few stocks that closed positive for the year in 2011, Walmart, this is a 5-year weekly chart. You see that Walmart is trading now at a new 1-year low, okay? Close to 2-year low, but it's trading at a 1-year low right now on Walmart. If you take a look at Caterpillar, CAT, this is a 5-year weekly chart. You see that it closed at a new 4 to 5 year weekly closing lows and daily closing lows. If you take a look at Procter & Gamble, this is a 5-year weekly chart. You see that it too closed at a new daily closing low new 52-week lows going back to 2.5 years. So if the center can't hold, obviously things are gonna fall apart. This is Eric Muathe, themuathe.com. Enjoy your Super Bowl. Let's see how next week shapes out. Just wanted to show you what I was looking at. Of course, we already know how to play, or how we're gonna play this market going into the new week. If I see something develop, I'll send you emails and text message alerts, as required. And those who are not subscribers can always join me for free on Twitter. This is Eric Muathe, themuathe.com. Peace and blessings to you.